Factoring and invoice discounting are basically the same thing, and probably the easiest way to look at them is as an alternative to getting an overdraft from a bank. What happens is that you can get up to 80% upfront from a bank or a factoring company against a sales invoice that you raise on, say, day one, today. You can raise an invoice for £5,000 today, give it to the bank, and they give you 80%, up to 80% of that. So you could get £4,000 on that day. The other 20% of the invoice is paid later on when the customer actually pays the debt, which perhaps is after 30 days or 60 days, and then the bank or factoring company will pay over that remaining 20% less a small administration fee for them. So it's basically money as soon as you invoice. It's like being paid upfront by credit card from your customer. So it can be a really good way of helping to manage your working capital. It's possible that you might get a higher level of facility through invoice discounting, as we'll call it, than through an overdraft, because you can get up to 80% against your debtors, whereas typically an overdraft is up to about 50 or 60% against the debtors in your bank, in your balance sheet. Another advantage is because they're only taking security against your debtors, it leaves all your other assets as potential security for getting leases or whatever else you need to do. There are various ways of structuring an invoice discounting factoring facility. You can have it that the bank or factoring company actually collect your debts, although most businesses prefer to keep that within their business internally, so you have your own credit controller. And in that case, the facility is completely invisible to your customers, which most people prefer. You can also typically get the debt insured by the bank or company, so that if a customer went bad, the bank cannot come back to you and get their 80% back from you, and indeed probably have to pay the other 20% remaining as well, and then the bank themselves will chase that bad debt. The main risk with invoice discounting is if your sales actually start dropping over a period, because that means your facility will start reducing. Whereas with an overdraft, you've got, say, a 50k or a 100k, £100,000 facility, that just carries on level. Because your sales are going up and maybe down, your facility may go down, and that may create a problem in terms of supporting your cash flow and working capital. So it's just one area that you need to think about. Another area to think about is the quality of your debtor customers, because not all customers can necessarily get factored. If they don't have a great credit rating, the bank may say, no, we're not going to factor that one. But overall, it can be a useful facility. It can work out a bit more expensive than overdraft, because typically there is an administration fee as well as the interest on the facility. But it is a good potential alternative for a lot of companies to overdraft.